Hi once again, everybody. Welcome back to the Comstock channel. I'm Marlin Bowling with you. I'm joined by Justin McKinney of Comstock Investments. We're going to take a look at Friday's market action and how we headed into the weekend. And remember to be sure and like this video and subscribe to it. Click that bell icon down below and make sure that you get notified when we have new updates. And feel free to share this with others as well. Justin, that market on the grain side left a lot to be desired when it came to the wheat trade. Soybeans looked like they had flopped after an early rally to $12 on that May contract, and then they sold off, but they did kind of save the day late on Friday. Any idea what happened there?
Well, Marlin, we had that NOPA crush report out here this morning, mid-morning, and those numbers were excellent. It came in at 186. That was above the trade estimate. I believe the top end of the trade estimate was 185 and change. That is a huge number. It's February over January, first time that's happened in over 20 years since we can dig back here on the reports. But just in general, that's a big crush number. We had some weather issues in January on the crush with delays at plants and things like that. But shortened month in February came ahead, crushed the beans. It really looks like USDA is probably going to have to update that crush number, which is great because we're going to offset some of those export sales.
Looks like we closed Friday on the soybeans right at the 50-day moving average. So I don't know if you can read much into that.
Well, we could bring some fun buying in, watching right at those 50-day moving averages. We saw that spike up yesterday, yesterday. We set back off of that. It was kind of concerning. We probably hit some hedge pressure, a little bit of technical selling. We had CONAB with a 146 number earlier in the week. USDA is still hovering in that 156, 155 area for Brazil production. Now, I kind of think that the market gave pause and said, okay, maybe these two numbers need to come together. Yesterday we came out, we saw some private analysts come in at the 152 ballpark, and that kind of it got the selling going and didn't stop yesterday. Happy to see that we had a rebound here today. We'll see what next week brings.
Well, the fact that it hit exactly $12, a big round number like that, and then it didn't bust through it. How significant is that?
Well, the fact that it traded it and there was enough, to fill the orders that were resting right at $12, right? A lot of times if you put an order in right at $12, those round numbers don't get filled or partial fills or whatever. But we got there. We didn't close above it. But I look at this bean market here. We've rallied this thing 60 plus cents in the last month and a half here. Is there some more there to get? Possibly. There's still those gaps up in the May chart and the July chart that people are eyeing, significantly above where we're at. But we're going to need to take this thing on an escalator, not an elevator up, if we really want to get those gaps covered.
What's your take on corn right now? I see where we gained a few cents today. Not a big win, but is it a healthier market than it was a week ago?
Well, first, we saw a flash sale today of 125,000 metric ton to unknown. Mexico has been the big buyer recently. So that routine flash business is good to see. We saw a drought monitor index come out, expanding drought in the heart of the Corn Belt. Iowa looks really dry. Fertilizer's going great. Everybody's geared up to get planting. However, it's still relatively dry in a large swath of the territory that I work with. So there is pause for concern on that. A private forecaster came out earlier this week with a 93 and change corn acres. Boy, we've talked about this number before, Marlin, and I sure think that that's a possibility. We can talk drought all we want if we get there and if we have a drought, but if USDA matches that number in print, that racehorse is going to be down the track so far. It's going to be tough to catch, I think.
Let's talk about the ugliest one on the grains, and that would be the wheat market. Just when we thought maybe it was breaking away from those contract lows here a while back, now we have, 4 days straight down again. Looks like maybe it wants to retest those contract lows. Do you think it's going to take them out?
It sure appears that way. China canceling that the news of China canceling U.S. wheat has been in the market for quite a while. You throw in cancellations to Australia, cancellations in France, European Union type wheat. And you have to surely think that they're originating that wheat from Russia at a discount from their buddies to the north. Um, and as those cancellations keep pouring into the market, you you sure believe that the risk is on the bear side there unless we get an early frost or wheat comes out of dormancy out west and we get a cold snap where we might ding it a little bit there.
I know we have in the past kind of touched on the cotton market, and everybody's wondering how many cotton acres we will gain this year, maybe taking some away from corn. What's the market telling us here as we headed into the weekend?
We sure hope that we can snag, 1,000,000 cotton acres. Strong close today, looking at that December cotton, still undervalued. But if you're looking at that old crop cotton at 93.59 on the close today, that may be just high enough to get a few people at least looking that way. I know we're going to need to make those decisions sooner than later. But new crop $83, $84 cotton should at least tread water on acres, but it's not a huge enough number that I think that we're going to swing, 2-3 million acres, maybe pick up 1,000,000 acres, which everything helps. But that's kind of where I'm leaning.
Now let's look at livestock. On Friday, it looked like the cattle market was going to come roaring back, and it looks like it kind of flamed out on the live cattle by the time we got to the end of the trading day. What happened there anyway?
There, you have a tale of two stories. You have the cash, you have the futures. Cash continues to crank higher. Heard some 187, 188 trade, some 190 in the live on some special all black deals headed to special processors there for program cattle. But at the end of the day, kill was down 11,000 versus last week. This morning, 25,000 versus last year. You have packers slowing chain speed way down. Weights are up 5 pounds at 919 was the average weight on the steers. So contra seasonally, we're putting weight on these cattle as we back up the chain speed. Personally, I've been trying to move some cattle here. Best bid I got was higher money by a couple dollars, but with time out into April. That's not necessarily a huge bullish picture for the cash market. And then you look at the future side, we went up, we filled that gap from back in October to the tick, which I don't know if I've personally ever seen that in 20 years, but to the tick and sold off. So I think we're kind of at a balance now. We have that April board at 187, and you have the cash at 187 to 188. It's been a while since the two have matched up. So we'll see what develops this afternoon in the plains on cash trade. But all indications are slightly better.
The feeder cattle, they look like maybe they're having some issues. Didn't necessarily have the greatest finish to the week. But how would you grade them on their health of the market compared to the live cattle now?
Well, there again, barn cattle are still hotter than anything I've ever seen. We continue to see daily sales, weekly sales, barn numbers that are just mind-numbing if you're trying to buy those cattle and lay those in. So real-time index was down slightly today, not nearly what the board was. I think the feeder cattle board maybe is just a little bit ahead of itself at this current time, but it should be fairly well supported, especially if we can get those boxes to come through where the packer is incentivized to put more cattle in the supply. Right now, depending on what numbers you're using, some people are saying $40 head loss on the packers. Some say an $80, depending on their cost structure. But as a general rule, they're not making a ton of money killing these cattle. And, we're slowly ratcheting those boxes higher. And I think the ultimate concern is how does the grilling season shape up and how is that beef demand going into summer? All the economic factors say that we're doing great. Maybe we're not curbing inflation, but we're not, adding to it or however you want to look at those numbers. But at the same hand, there still is a pretty good risk for the packer to go ahead and load the cooler at $310, $311 boxes that you may or may not get sold.
Well, lean hogs put an exclamation point right at the end of the week here. And on the bar chart, that looks really strong here on Friday's close.
You know, we got that hog and pig report coming out on the end of the month, the same day as the acres report. So that could be a little bit of a sleeper. That hog market has been relatively strong the last month or month and a half, which is great. It allows some producers to lay off some risk. But we look at the cash cutout at 93.30 in the midday, up another $1.18 today. Cash hogs traded over $80, which is the first time that's been in a print in quite a while, on a fairly decent run, 3,200 headers so on the midday. So all these factors in, it seems to me like that pork is sure moving product.
So do you see a new upside target on the hog market then?
Well, there's a lot of targets out there. Summer hogs, you know, we're probably at a target point right there. Possibly, you know, break out to that $109, $110 upside target. But as we look forward, those third and fourth quarter hogs are historically just terrible. If we can get that follow through in those back months, it would be up into the $90 for a chance to lay some hogs off. I can't disagree with anybody doing that out there. And especially with the news, Tyson closing the Perry plant moving forward, that's 2% of the hog kills. So automatically we have to pick that up somewhere. Maybe we cut that. Maybe the hog and pig report shows that we lost that many hogs last year, so it's not as big a deal. But at some point in the winter months, if we get backed up on those hogs, it's a tough row to hoe.
Anything in the outside markets that concerns you or encourages you right now? Do you see any opportunities out there?
Well, you know, the soft market keeps on fire. Cocoa we had that March expire earlier this week. May picked up and just screamed right back to where it was on the cocoa, over 8,000, almost, you know, double the previous record, give or take. We look at orange juice, is still relatively firm. Those markets generally are always considered driven on the economic side of the world, and both of those were very strong today. So we look forward to seeing what those things can do, but cautious when you see things putting in all-time highs and double of all-time highs, like the gold market. Silver has been relatively firm this week, but that has a long ways to go yet. So to go back to its all-time high. So if we look at that market, you know, possibly some action in that.
All right, Justin, good to talk with you again. Thanks for helping us recap what took place during the marketing week here. And we'll look forward to what happens here as we get into the middle of March. And now we're going to be fully into March Madness too yet. So maybe
March
that'll
Madness,
come into play as well.
March Madness and Acre Madness at the end of the month.
Yeah, right. That's a good way to put it. All right, we'll catch you next week. Thank you, Justin. Justin McKinney of Comstock Investments with us. That'll do it for this episode. For producer Brianne Hendrickson, I'm Marlin Bowling. Catch you next time right here on the Comstock channel. Thanks for joining us on our Comstock YouTube channel. Don't forget you can also find us on Facebook and TikTok as well.